What is up, my Forex for Beginners family? Okay, so in this lesson, we're talking about time frame correlation. And what does correlation mean? Correlation means connection. So what is the connection between all the time frames? And especially when you're placing a buy or a sell. So I want you to, in this lesson, we're going to focus, because we're on the monthly time frame, and what we've learned from the previous lesson was that the monthly or the higher time frame is boss. The higher time frame it rules. So when price approaches a monthly level or a support and resistance or an exponential moving average or whatever the skill that we've learned in previous chapters, the higher time frame is always the strongest of the trends. So in this example, we're going to be examining the monthly time frame. So that's why I put a little M here. We're on the monthly time frame right here. So we're going to examine this monthly candle. So the month of October just ended. It's now November 1st. So a new candle formed. So what I want you guys to do is on this monthly time frame, we're going to examine just this candle here. I drew this line here because these little these wicks came down and touched this bottom a few times, and now we printed a large bullish engulfing candle on the monthly candle. So what swing traders do is, you know, when it reaches a monthly level, they would just place a buy here and put a stop loss here and see where the trade goes. But what I learned in my time learning Forex, especially when we're having starting with a smaller balance, our goal is always to be the entry king. So by having a precision entry, you reduce your risk and your negative balance. So the trade, if you want to have a precise entry, so that way you're what they call drawdown. Drawdown is when your balance goes negative. So when you're in a trade, you know, it can fluctuate positive and it can fluctuate negative. And if it goes too negative, you'll have to close the trade before you essentially, you know, lose all the money that you have in your account. So when you're swing trading, you have to have a large balance, and you can hold a large negative balance. And the other end of swing trading is day trading. Day trading, you use the lower time frame, but as you've learned, when you go in the lower time frame, there's a lot of fluctuations, and you can kind of be spooked out of the market by doing what you call day trading on lower time frame charts. And you can day trade, but it takes a lot of skill and knowledge and practice in order to understand all the basics before you day trade. So that's why I don't teach right now day trading or swing trading, because you need a large balance for swing trading. I like midterm trades that have a nice profit area, and you can control your risk. And that's why I teach you guys to sit on the 4-hour time frame for your structure and whatnot. But again, on the last couple lessons, what I've been trying to teach you is why all the time frames matter and why the higher time frame matter. So let's again come back to here, and let's talk about this candle right here. So this last month, October, just closed. We have another candle forming here for the month of November, and I want you guys to look at this candle, because we printed a large bullish engulfing candle, and when we get a bullish engulfing candle, that is indication that you know, a strong bullish momentum or upward momentum may be following, because this candle engulfed the candle to the left. So say if we saw this candle and it was a big bullish engulfing candle, and we're like, okay, well, I see there's a lot of bullish momentum, I want to start buying. So do we just blindly place a buy here and put a stop loss here and see what happens? We could. That's what swing trading is, but I want you guys to use the other time frames to your advantage. So what I'm going to do here is, instead of switching up here, switching to my daily or 4 hour, I'm going to show you the time frame correlation on one chart. So stand by 1 minute. So see right here, this right here, it says select layout. You can do this. This will split my layout into this shape here. So I'm going to select it, and then I'm going to scroll over here. And so when I click on this, it puts this blue box. See this blue box right here? It puts this blue box around this. So now all of my controls are with this time frames or this chart. So for here, I just put a nice little M here to represent the monthly time frame. I clicked on the monthly right here. I clicked on the monthly. So this now is the monthly time frame. I marked it with a monthly time frame or a M. And now I'm going to go over here and I'm going to click on the chart first. Now there's a blue box around it. So now all these controls, so I'm going to click on daily. So now this is the daily chart, and then I'm going to do the same thing here, and I'm going to select the 4 hour chart. So I've already selected that ahead of time, but you can see how it's blue here. That means this chart is a 4 hour. When I click over here, it switches to the daily, and when I click over here, it switches to the monthly. So now we can examine what's happening. So to be an entry king, so say entry king or queen, that's a term that we've been using for a long time. That's the goal. If we can become aware and knowledgeable to the point we can become what we call an entry king or queen, that means our entries are so precision that we never have really much of a negative balance. And that's what we want. We want to always buy when the market is going up. So say we're going to buy right here. Okay, so say we're going to buy after this candle. When I use this arrow here, see how it's marking up these other time frames here? So let's just move this to here. So say if I wanted to buy right there after, I can say, hey, this month closed with a big bullish engulfing. I want to buy about right here. Actually, it's right there. That's where the candle closed. But see, if you look at the daily candle, you can see that it formed a little doji here, and then another candle is going up. So how we use time frame correlation is, see here we're seeing that the monthly is in a buy, right? The daily, we had a doji and then another candle that's going up. But why I like using the 4 hour time frame, because look, you can see that after this monthly printed right here, we printed a monthly candle, and instead of buying right here, if we bought right here, we would have started accumulating a negative balance. See this? This is all a negative balance. See how it went down? If you placed a buy here, and if you had a small account, you could have been going negative, 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 and you would have started panicking. Oh no, I just bought, and why is price going down? I thought the monthly showed a big bullish engulfing, a big bullish engulfing candle. How come I'm going negative? Why am I going to a negative balance if you bought up here? Well, that's why what I'm trying to tell you is, when you see on the higher time frame something you like, so here we saw, we were interested, we said, oh wow, there was a bullish engulfing candle. That means we should start buying. But I don't want you to blindly trade or place a trade. I want you to dig deeper. I want you to use the higher time frame for clues. These are strong clues. Big bullish engulfing. Okay, well, let's then look at the daily and 4 hour. And especially I like the 4 hour is we could have saw that, hey, okay, we had a big push upwards and now we're actually in a downtrend. So you wouldn't want to place a buy until you saw something around here, or you could even run fibs. So let's pull out our fibs tool. See what we see. So we're seeing an uptrend, it came down a bit, an uptrend, it came down a bit. So let's just run, say, our fib tool from here to here. Okay, and before I talk about this, see how on this chart here I drew fibs and it also shows up here. So one thing I want you to also know about is you can do this on any drawing tool, whether it's a trend line or anything. So you can just double click on it, just how we do. Whoops. Go to visibility. All of these tools will have a visibility tool, and you can choose what time frame you want it to show on. So maybe you have a fibs on the hourly chart and you only want it to show up on the hourly chart. Then on all the tools you can use this visibility tab, and right here I only wanted this fibs to show up on the 4 hour time frame. So I'm just going to deselect all of this hours, and so on the 4 hour chart I want to show up. So if I have hours selected, as long as I have, if 4 hours is in this range, which it is, then it should show up only on the 4 hour chart. So you see how it now disappeared here. So this is just a way to keep your charts clean. So it's a little off track there, but anyways, back to here. So so back here we saw a big bullish engulfing candle for this month of October. We're now starting November. We're interested in buying. So we could look at the daily. The daily, see here, you know, say we saw this doji, you know, it doesn't really, honestly, in this situation, the daily isn't really telling me very much. So that's why I love the 4 hour. So on the 4 hour chart, 1 second, sorry. I'm trying to move this guy here. Oops. So in the 4 hour chart, we can see our fibs. We can see our fibs from here to here. It retraced to 61%. And like I said before, this is my sweet spot. See how it spiked up into this area here? It's between 61.8 and 78.6, which I call my sweet spot. So instead of just blindly placing a trade because you saw over here a big bullish, I'm looking at the left here, a big bullish engulfing, I want you to look at the lower time frame as well and see that, hey, on the 4 hour you could see that we started forming a downtrend. So you want to wait and possibly run Fibonacci like I did and say, hey, we're approaching 61.8. This would be a better place to place a buy, and then our risk to reward is really good and it's in our sweet spot. So we have like multiple reasons to buy here. So this is what I mean by time frame correlation. So if one time frame is showing you, the monthly is showing you we're in a buy, you want to also maybe check the daily or the 4 hour. The 4 hour is my favorite. Look at the 4 hour and make sure that you're seeing the trend in the same direction as you want. If you're in a buy, you want to place a buy when you see a retracement, and then this is how we join the trend. So this is so we don't have, you know, if we placed a buy here, we would have been in a drawdown. So that's why don't just look at the monthly candle, look at the lower time frames and make sure you have time frame correlation. So when the monthly looks like a buy, make sure your 4 hour looks like a buy before you place a trade. And what else can we see here? 1 second. You can also see that this right here is, look at that. It's also it came up, bounced here, jumped up above, and now it's finding support. So this is another reason why, you know, our monthly showing us a buy. We jump into our 4-hour and we look for a better opportunity buy. So we didn't want to buy up here. We wanted to wait for a pullback, or we see that it's forming a pullback. So we wait until a proper level, and in this case was resistance turned support, and it was 61.8. So this is where we bought, instead of blindly buying from the higher time frame, because we would have bought at the top. We could have waited and seen that, hey, the 4 hours is starting to form a downtrend. I don't want to buy until the 4 hour is showing a uptrend. And that's what time frame correlation is. And I'm trying to help you guys understand this time frame section. It's one of the most important lessons that I've done so far. So if you take anything away from this lesson, is when you're looking at the higher time frame, whether it's the monthly or daily or weekly, when we're looking at the monthly, daily, weekly, we tend to look more at the individual candles. You know, if there's a big bullish engulfing candle, or if there's a big bearish engulfing candle, that's what we focus on when we're looking at the monthly, weekly, and daily candles. But when we jump into the lower time frame, so if we want our monthlies or weeklies or dailies are showing us that we should be buying, we want to drop down into the lower time frame and make sure that when we're buying or we're selling, we're not buying when the 4 hours is in a downtrend. We want to buy around this point. So this would be another example of, say, if we were see how this is trending upwards, but it's making what we call market structure. So let me use my fib tool again, and this is why I love fibs. Like, you can run, you know, fibs from here to here, and 1 second. I like to slide my fib tool over to the right just so I have some I have some room to view. So you can see here, like, we're trending upwards, and then we made a downtrend and we came to 31.8, and we struggled to drop below here, and we formed a bullish engulfing candle right here. So now we would possibly place a buy because our monthly's in a buy, our weekly's in a buy, and now our 4 hours in a buy. And that's what time frame correlation is. And I hope you understood that lesson, and thanks for watching. And when next time you're ready to place a buy or a sell, make sure that all the time frames are correlating or are in correlation together. Okay? Thanks. Bye.